Hello guys, welcome to another video. Today I'm going to be speaking about the draw on liquidity and how to find it. Okay, so I'm going to be showing you how to find the draw on liquidity. And before we actually go into the charts, straight into the examples, I just want to quickly show you this. Okay, so there's two types of liquidity. Okay, there's two things price will actually do. In fact, forget liquidity, there's two things price will do. So firstly, we've got external range liquidity, so old highs, old lows, equal highs, equal lows, stuff like that. Okay, so just highs and lows. And then we have internal range liquidity, which is fair value gaps, so inefficiencies. Now the only thing price will actually do is either seek liquidity, as in old highs or old lows, or go to reprice fair value gaps. Okay, so inefficiencies. Okay, and these are the two main things that price will actually go for, and what I'm going to be showing you today. Okay, so let's go into the charts. One thing I do want to point out before I actually start with the examples is that I'm using the lower time frame, like the 15 minute and 5 minute, to get my entries. Okay, so I use the higher time frame, like the 4 hour, the 1 hour, and the daily for my draw on liquidity. Okay, so right now I'm on the 4 hour chart on Euro USD. Okay, now let me just show you what's just happened in price right now. So we've had this high, you can say, this wick. We've had this high, we've had these relatively equal highs, these two highs relatively equal. Price is actually taking these highs right now. Okay, so once price takes out these highs, what we'll expect is, well, we're going to react as traders. We need to actually find out, is price actually going to continue going up to seek these old highs as well and these old highs as well, or is price going to displace lower to actually go and seek sell side liquidity instead? Well, that's when you monitor on the low time frame. But here you can clearly see that price is displaced lower after taking out this high. And what's our next draw on liquidity? Well, price is not really going to go any higher. We've created displacement to the downside. Our next draw on liquidity is this old low, this external range liquidity low. Okay, so we're going to see if we actually take that. Okay, so we take this low right here. Now, what's our next draw on liquidity? Well, we've not really got a draw on liquidity, but we just need to mark out the external highs. So we've got this high, and then of course we also have this fair value gap. So if we just, okay, so you can see that we just continue with the spacing lower. So we also have this fair value gap, and we can actually come into any one of these fair value gaps. Price just displacing lower, so you just wait, and of course you wait until there's some sort of displacement to the upside into this fair value gap, or displacement higher, so you can actually seek buy side, and price just continue going lower, and price actually comes into this fair value gap. Remember, price can come into this fair value gap as well. Now what we want to monitor is price actually going to go to seek this high or this low? Now is price going to reject away from this fair value gap? Okay, let's check. Okay, cool. So we can see that price is still in this fair value gap, and then I think we're respecting this fair value gap, I believe. Then price starts to respect this fair value gap. Do we create displacement lower? Not really, we're just going higher. And there, put it back. So there, I believe that's displacement lower. So this fair value gap is actually being respected. Okay, just look at the bodies of the candle. They're not trading above the fair value gap. I mean, we could have traded into this fair value gap as well, but if we get our fib retracement from this high to this low, we can actually see that price came into exactly 50%. Okay, 50%. So price actually came in, it's maybe slightly above by a pip or less than a pip, into premium, and we've actually respected this fair value gap, so did not need to come into here. So price respected this fair value gap. We've created some sort of displacement lower, so our next draw on liquidity is actually this old low. Okay, so this external low, and then we actually take this low. Okay, now even here we've seen there was displacement. Even here there was opportunity for you to get in before this low was taken. Why? If you actually look closely, there was this small fair value gap that price retraced into. Look at the beautiful respect to that fair value gap. Price retraced into before dropping lower and taking out this old low. Okay, so there's always opportunities. And so what's our next draw on liquidity? Well, we've now taken this low. We've not really closed below it, but we have this fair value gap, so this internal range liquidity, this inefficiency. We have this fair value gap. Price could come to this fair value gap, and we'll see what price does. Okay, so if we just now mark out our new external, so we have these relative equal highs over here. And then we have this low. Let's see what price does. Price actually continues lower. We take this low out, okay? We just keep going until price does something, okay? You react to what price does. Does price create displacement in the opposite direction? Okay, so we're near this fair value gap. And okay, so we do not respect this fair value gap at all, okay? Price trades straight through it. So what's this saying to us? That we're now actually going to seek old highs, okay? So where the old highs, we have these relative equal highs above here. So price could go here, but we actually in fact have this high as well. Okay, so we have this high, so this is going to be our next draw on liquidity. So from here, on the lower time frame, you could be entering on the 5-minute, 15-minute to actually be looking for buys up until here, okay? So we're going to monitor what actually happens to price once we take this high out, if we take the high out. Okay, cool, so we do actually take this high out, and we're looking very strong. We've created displacement. We had this one displacement move up, hence why this was our draw on liquidity, and this fair value gap actually got disrespected. Let me just put this fair value gap back in. So our next draw on liquidity is going to be these relative equal highs. Why? Because we're very strong in price. There's strong displacement to the upside. Okay, and then cool. We don't actually take this buy side liquidity out, these relative equal highs. So what's going to happen? We've actually created some sort of displacement lower, but you'd want more displacement lower. Okay, and you get that, and you get that as well. Okay, so we've got this displacement lower. Now, is this displacement, or is this actually coming down to fill in this fair value gap? Okay, so remember what I said, price is either going to seek liquidity in the form of old highs, old lows, relative equal highs, relative equal lows, or the price is going to inefficiencies like fair value gaps. Now, sell side is not our target. This old low is not our target until we see that price is not respecting this fair value gap over here. Okay, price comes in, and then you can see that I think we are respecting this fair value gap. Why? We've came in, we've created this displacement move up, and then we just continue going up. Okay, this fair value gap actually gets respected. Okay, why? We come into here and then we actually reprice and we move away. Okay, that's where you know that you're not always going to be right. Okay, so our next draw on liquidity would have actually been these relative equal highs, or even this old high after repricing that fair value gap. Now, do we get that? No. Do we actually come down now? Do we disrespect this fair value gap? Yes, we take out this low. Now, what's our next draw on liquidity? Next draw on liquidity is this low and this low. Okay, so we react to what price does once we take this low. Okay, we take this low and we don't close bearish. Okay, we don't get a down close candle. So let's just see what price does, because price could just come down again. What's happening? We have this fair value gap, so price could literally be coming into this fair value gap to maybe then come down more, but we just have to react to price, like I said. Don't know why it's not working. Okay, there. And what's happening? We don't respect this fair value gap. Okay, so we're creating this displacement move up. We've created this displacement move up, and we've got no signs. We've got no signs of bearish price right now. Okay, got no signs because this fair value gap does not get respected. We look at the bodies of the candles, we close above it as well, and our next drawn liquidity would actually be this high. Okay, so you can see these highs are relatively equal. See, this is just choppy price action right now, and then what happens? We actually take our drawn liquidity out. Why was this our drawn liquidity? Well, we took out this old low. We don't get a down close candle, which really and truly is not important, but we had this fair value gap. Price could have came into this fair value gap to continue going lower, okay, but we didn't, right? That didn't happen. What happened instead was we disrespected this fair value gap, we closed above it, we had this retracement. This was our drawn liquidity, these relative equal highs, so these two candles highs, they're relatively equal, and our drawn liquidity was met. Okay, so if we put this forward, our next drawn liquidity will be here, but let's actually react to price. Let's react to price. Let's see what price does. Okay, once we take out this high. Okay, what happens is we actually take out this high and this high. Now, what is price actually doing? Price could actually be coming to this fair value up here, right over here. Do we come into it? No. So let's just react to what price does. So our drawn liquidity is in fact this fair value gap, but that does not need to be met. Why? We have this fair value gap too. Price could come into this fair value gap before going into this fair value gap. Okay, so we take out these old highs. Okay, let me just put that down there. This looks very messy right now. So right now our drawn liquidities are being met, and then price comes into this fair value gap. Okay, price comes into this fair value gap. Remember, internal range liquidity, inefficiencies. We come to this fair value gap. Let's see what price does, and of course you can see that we trade straight below it. Now, what's our next drawn liquidity? Will be this low here. It will be this low here, and this low. So what's our drawn liquidity here? Sorry, just bear with me. This low here. We obviously be coming into this fair value up over here, and then cool. See how you could have caught a clean trade. We found our drawn liquidity. Why? Because our actual bullish bias turned out to be wrong, because this fair value gap actually got disrespected. So this is showing signs that price is likely to go down to seek sell side liquidity, old lows. Price came up into this fair value gap. We had a fair value gap. Price came up into this fair value gap. Right there, you could have been a seller. Okay, on the lower time frame, could have even looked for extra confirmation. So we take out this low, and let's react to what price does. Our next drawn liquidity is now this low, so we're going to be selling towards this low essentially. Okay, so this old low. Okay, so we wick up here and we come down, and then what happens? We actually take this low out as well. Okay, now, so our this drawn liquidity was met as well. So we could have got two trades there. Could have got a trade here up until this drawn liquidity. We could have got a trade somewhere here until this drawn liquidity, this old low. Now we have to react to price. Remember, we have to react to price. What next? Well, this low is taken. So what's our next drawn liquidity? Here. Now let's see if price wants to displace higher to maybe seek old highs. Nope. And then we take out this drawn liquidity to this old low. Now, charts are messy. I hope you've learned something from this. There's a lot you can learn from this. This is a drawn liquidity. Okay, so you're reacting to price. What happens after price takes out old lows? What happens to price after taking out old highs? Okay, what happens to price when we disrespect a fair value gap? Okay, what happens to price when price is respecting a fair value gap? Is it going to continue to go in the direction? These are the things you need to take into consideration. Okay, so remember here, one last note as well. Remember here I said, okay, we want this fair value gap to be traded to. Okay, cool, that was our bias, that was our drawn liquidity. Well, remember, things can change. Why? Because we've seen price is not respecting this fair value gap. We would usually want to see price come to this fair value gap and move away. We didn't get that. So what happened? Price will now want to seek sell side liquidity in the form of older lows. So disrespected it, boom, straight away. What was our next draw on liquidity? Here. We could have been seller here. What was our next draw on liquidity after taking out this low? Here. This new low. Could have been a seller here. What was our next draw on liquidity after taking this low? This next low here. What happens? We take it, okay? And you can see our price came into this fair value gap before doing so, okay? So this is just beautiful price delivery, okay? Now, I hope you learned something. I hope you was taking notes. And yeah, join the public Telegram channel, which is linked below. It is in the description. Make sure you go and follow my Instagram. That would be much appreciated. That's also linked below. And my mentorship is also linked below if you do want to join that. Okay, until next time, take care.